Now, fears of a global recession swept Wall Street as frantic sell-off slammed U.S. equities, bonds and the dollar once again. That comes less than 24 hours after President Trump reversed course on his once-in-a-century trade war to avoid a financial market collapse. But markets plummeted again on Friday to return to the red, with gold surging to a new record and the dollar extending losses after falling off a cliff to mark the biggest plunge in 3 years. Our Asian stock gauge is set to decline for a third week in a row after rising on Thursday on hopes of further government stimulus measures. Chinese and Hong Kong stocks fell on Friday. The Hang Seng Tech Index has lost almost $350 billion from its peak in March. That is, despite a partial recovery of about 9% in Chinese tech stocks from their recent losses. Market relief quickly turned to anxiety when the White House clarified that U.S. tariffs on China increased to 145% after a brief relief rally. The sell-off that had begun early in the week resumed. S&P 500 futures fell 1%, indicating another red opening on Wall Street. A cooling U.S. inflation reading did not stop the carnage. The euro rose as much as 1.6%, the yen strengthened, and gold reached a new high. Several emerging market currencies too rose versus the dollar. A measure of emerging market currencies advanced 0.6%, heading towards its strongest day since August. These moves indicate that investors are looking for safe havens and non-US alternatives. The Chinese yuan has weakened to an 18-year low. Some on Wall Street were expecting China to devalue the yuan significantly versus the dollar. However, Beijing is more likely to weaken the controlled currency gradually. For investors, gold seems to be the best place to be as tariff turmoil sparks a climb for the yellow metal to a new record. Bullion gained as much as 1.4% in early Asian trading on Friday. Its price of nearly $3,220 eclipsed the previous all-time high posted on Thursday, when it closed up more than 3% for a second day. Gold's rally of more than a fifth this year has also been boosted by central bank buying. For more on this, we're now being joined by Anna Tangen, Senior Fellow at the Thai Institute and Chairman of Asia Narrative Substack, live from Beijing. Thank you so much for joining us on World Business Watch.
A pleasure, as always.
Let's begin with this. How significant do you think Goldman Sachs' quick recession U-turn for market sentiment is?
Well, it was inevitable. Donald Trump played the biggest gamble of his career. He bluffed, and unfortunately for him, he lost. And even more unfortunate, the United States has lost. He doesn't understand that the damage that he's done isn't just something he can turn on and off with a switch. Companies have lost faith. They don't know what's going to happen in the future. These tariffs are not working out, but Donald Trump doesn't know how to climb down.
Right, and that being said, can China's monetary easing realistically offset Trump's 125% tariffs?
Not in the short term. I mean, overall market sentiment is very, very negative. It's kind of a, the crowd is running in one direction. It's very hard to run against it. Smart money would be looking for value right now. But as it is, everybody has been buffaloed. They don't know what's going on. You can see that clearly in terms of asset allocations, et cetera. So at this point, the smart ones will be looking for the opportunities. The rest will be following the crowd.
Right. So how do you assess the prolonged impact of tariffs pause, and what sort of an impact do you think that will have on global supply chains?
Well, the tariff pause is, it's half pregnant. No one knows what it means. Does that mean that Donald Trump thinks he can manhandle China into a deal that he thinks is good for the United States? Highly doubtful. They've said that they won't do it. Putting it off 90 days doesn't mean that it goes away. It just means that if he's unsuccessful with China, he doubles down on the rest of the world in order to get what he thinks the United States deserves.
Right, and you did speak about the market sentiment, which is extremely negative at this point. Do you think investors are overreacting to the short-term tariff announcements?
I don't think they're overreacting to the short-term situation. It's just they don't know what the long-term is. You know, we both know that markets and businesses look for certainty, and right now Donald Trump has made that impossible. So until there is some cohesive economic policy that wasn't sketched out and crammed by an 11-year-old, it's going to be very hard to calm the markets.
Absolutely. The uncertainty has, of course, created this negative outlook. But that being said, Mr. Thangen, thank you so much for joining us on World Business Watch with your insights on this. It's always a pleasure to have you with us.
Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.